Credit cards aren't convenience, they're keeping you stuck in a cycle. Because with 20% plus interest, you're paying thousands just to stay in the same place.
All right, if you're an XRP holder, you know the feeling, right? It's one of the biggest names in crypto, but man, for a lot of people that has been a long sideways journey. So the real question is, what is actually next for XRP? Let's just get right to it. A pretty shocking 60% of XRP investors are underwater right now. That means their investment is actually worth less than what they paid for it. So to get a really objective look, we decided to skip all the usual market gurus. Instead, we went to 3 of the most advanced AI models out there for a purely data-driven look at XRP's future. And we're not talking about your average chatbot here. We used Google's Gemini 3.1 Pro, the very latest version of ChatGPT, and the super powerful Claude Sonnet 4.7. We gave each of them a simple task. Analyze everything, the economy, the tech, the market, and give us a forecast for 2026. Let's see what they came up with. Okay, so first things first, let's look at the bright side. We asked the AIs to pinpoint the top factors that could actually send XRP's price soaring. And interestingly, they all kind of landed on the same few key things. So what did they spit out? Well, they all zeroed in on 3 major potential growth drivers: a brand new on-chain lending protocol, the chance of a flood of money coming in from ETFs, and the launch of Ripple's very own stablecoin, RLUSD. Let's break each one down. Now, this new on-chain lending protocol, this is a big deal, especially if you're a long-term holder. Instead of moving your coins to some third-party exchange and hoping for the best, you can now earn up to 5% a year right on the XRP Ledger itself. That's way more secure, and it really encourages people to hold on to their XRP. And listen, this isn't just a theory. The AIs dug into the on-chain data and found something pretty wild. The big money players, the whales, are already jumping on this. They're buying up about $9 million worth of XRP every single day, just because they can now safely earn interest on it. That is a serious, powerful engine of demand humming in the background. The second huge factor is all about regulation. There's a Clarity Act pending in the US, and if it passes, it could basically give the green light for spot ETFs. You know, those investment funds that buy and hold XRP directly. This would make it super easy for huge institutions to invest, and that could mean a massive wave of new money pouring in. But you know, it can't all be sunshine and rainbows, right? Of course not. The AIs were just as direct about the serious challenges that are holding XRP back, and the biggest one, well, it actually starts with the people who believe in it the most. This chart just lays the problem bare. It's called retail capitulation. With 60% of regular investors sitting on a loss, you have this massive psychological wall. Think about it. People who bought way higher are just sitting there, waiting for the price to get back to where they can just sell and get their money back. That creates a ton of selling pressure anytime the price even tries to move up. And all that pressure, all that get-me-out energy, it has a magic number: $2. This isn't just some random price target. It's a huge psychological and technical wall that XRP has just not been able to break through. So here's the trap, and the AIs were super clear on this. As long as the price is stuck below $2, 2 things are happening. First, that 60% of underwater holders are probably going to sell the second they break even, which kills any rally before it starts. And second, new investors are standing on the sidelines, right? They don't want to buy in until they see the price smash through that $2 ceiling for good. It's a total catch-22. On top of that, you've got other issues like money flowing out of some existing XRP ETFs overseas and, the whole macroeconomic mess with interest rates. But the most fascinating risk that all 3 AIs flagged was something they called the stablecoin paradox. Okay, so you've got the good, you've got the bad. What does it all mean for the price? We made the AIs put their money where their mouths are and give us actual, concrete price predictions for the end of 2026. Check this out. What's really striking here is how close they all are on the base case scenario. Gemini says 275, ChatGPT says 280, and Claude says 240. That tells us that a price somewhere in that range is a pretty reasonable expectation. Now, those high-end numbers show that crazy growth is possible, but that's only if everything goes perfectly. And of course, we had to ask the ultimate moonshot question. Can XRP flip Ethereum? Take the number 2 spot? On this, the AIs were all on the same page, and they were blunt. The math just doesn't add up. For that to happen by 2026, yeah, they said you can pretty much forget about it. And now we get to the final piece of the puzzle, the one thing that all three AI models flagged as the most critical and most overlooked factor for XRP's future. It was listed as something that could help it grow, but it's also, paradoxically, its single biggest risk. This slide just nails the core problem. Think about it. XRP's main purpose, its wholesale pitch to banks, has always been fast, cheap payments across borders. But its biggest flaw? The price is all over the place. If a bank wants to send $1 billion, they don't want it to be worth $950 million by the time it gets there. So what did Ripple do? They created the perfect solution, RLUSD, a stablecoin that's always worth $1. It gives you the same speed with zero price risk. And that brings us to the billion-dollar question that the AIs are forcing us to ask. The entire reason RLUSD was created was to fix the XRP token's biggest weakness. But if the solution works, if institutions start using the stablecoin for all their transactions, what's the point of the XRP token anymore? The stablecoin's success could literally eat the token's main use case for lunch. All three AIs call this out as the silent threat that's just lurking in the background. The massive success of Ripple's stablecoin could, crazily enough, be the biggest long-term danger to the value of the XRP token that everyone is holding on to. So the final thought from our AI investigation is this really powerful question. Is the very thing designed to bring massive adoption to the XRP Ledger, a stable, safe asset for big institutions, also the very thing that could make the XRP token itself obsolete? That is the complex, difficult reality that every investor has to really think about.
So the real investment isn't stocks or crypto, it's killing your high-interest debt first. Subscribe if you want to escape the debt trap for good.